accounting superstars. Welcome to the channel. Glad you're here. Here's what we're going to do today. Today is an introduction to the financial statements, the income statement, the changes in equity, and the balance sheet. And also, we're going to get a little more practice in keeping this accounting equation in balance. It balances with assets on the left. We have an equal sign. Liabilities and equity on the right. You'll see how this works, and the best way to learn about it is just actually work with it. So here we go. We need some transactions before we can do the financial statements, so here we are with some transactions. Fred is going to start his own snowblower service. This snowblower service has not operated before. This is his very first month operating his snowblower service. So here we go. So Fred is going to invest some of his own money into the business. He's going to invest $5,000. Now Fred does not owe anybody this money. He doesn't have to pay anybody back. So we're going to call this $5,000 on the right as equity. So there we go. So check it out, folks. The accounting equation balances. We have 5,000 on the left, 5,000 on the right. Everything's good. Now what I'm going to do is anytime I make an entry into this equity section, I'm going to label it. So I'm going to call this an investment. So this is Fred's investment in his own business. Now Fred knows that $5,000 is not going to get him started, so he's going to go to the bank and take out a bank loan. And Fred is going to borrow $25,000. Now Fred has to pay this back, and so it's a liability. So on the right-hand side of the accounting equation, we'll put $25,000. And if you can see this, we've got 25 on the left, 25 on the right. It balances, and if we look at the totals, it balances also. 30,000 on the left, and if you add 25 and 5, that's 30,000 on the right. Left equals right. All's good. Now Fred, he's just opened his doors, and in comes a customer, and Fred provides us service. He fixes a snowblower for somebody and charges $200 for that service. Now we have to keep this accounting equation balancing, so the left-hand side's got to equal the right-hand side. So we have $200 on the left. We've got to have $200 on the right. Now folks, we only have a choice here of liabilities and equity, so Fred doesn't owe this $200 to anyone, but it's his $200. He earned it. So we'll put $200 right over here under equity, and we'll call it revenue. And it's always good to make sure your accounting equation balances. We've got 200 on the left, 200 on the right. It balances, and we're calling it revenue. Revenue is money coming in from doing your job. Now there's a more technical definition of revenue that's very important, but for now, money coming in from doing your job is good enough. Fred owes a worker. Fred had some help fixing that snowblower with his very first customer. Now, since Fred owes the worker, that's a liability. It's got to be paid back. So I'm going to put here $50, meaning that Fred owes this $50. And if you can see, it increased the total of the liabilities. He now owes more money. Now what are we going to do? We've got to have this accounting equation balance. The left-hand side has got to equal the right-hand side. Well, a negative 50. Now check this out, guys. So we've got $50 right here and a negative 50. Well, 50 and a negative 50, what does that net to? It nets to 0. So what I'm going to do is I'm going to put a 0 over here on the left-hand side just to make it more clear. I really don't have to put a 0 over there, but I'm doing it just so you can see it balances. So I've got 0 on the left-hand side and essentially 0 on the right-hand side. So it still balances. When workers work for Fred, that's an expense. Our definition of expense when we're starting in accounting is money going out from doing our job. Now money hasn't quite gone out yet, but it will. And this is from doing our job. So we're going to write it down as an expense. Fred is going to take a ski lesson. Now a ski lesson has nothing to do with fixing snowblowers. It has nothing to do with running his snowblower service. But Fred is taking $25 out of cash out of his snowblower business And so I'm going to write that down as a negative $25 for a ski lesson because he's taking money out. It's reducing his assets. It's reducing his cash. We've got to make this accounting equation balance. I've got a negative 25 here on the left, and I need to have a negative 25 over here on the right. So here's what I'm going to do. I'm going to put negative 25 right here, and our equation balances. Now I'm going to call that a withdraw. So whenever owners take money out of the business, like Fred did for the ski lesson, we call that a withdraw. Next, Fred's going to pay his employee. Remember, his employee earned $50 and Fred owes that $50. Well, Fred is today paying that money, so he's paying out $50. And we're reducing the liability by $50. So check this out. Let's see if this accounting equation balances. On the left-hand side, we have a negative 50. And on the right-hand side, we have a negative 50. So it balances horizontally. And if we look at the totals, I think you would agree that the totals balance too. 30,125 on the left. And if you add 25 and 5,125 on the right, you can see that balances also. So we balance. So let's skip down here and do the financial statement. First comes the income statement. You have to do the income statement first. These statements have to be done in order. In fact, I've got them labeled. Number 1, income statement. Number 2, changes in equity. Number 3, the balance sheet. They have to be done in this order. You can't reverse the order. So revenue. Revenue here, if we look at our chart, revenue was $200 when he fixed that snowblower for a customer. Revenue is money coming in from doing our job. And Fred had an expense too. It was that worker. Here it is. I labeled it expense, $50, a negative 50. So I'm going to write here a negative 50. Check that out. And net income is simply going to be the difference between those two. So here we go. So add those up. And here we are. Fred made a profit of $150. So the income statement is very simple. It's money coming in from doing your job minus money going out from doing your job, and there's his profit. That's what he made from doing his job. Now, coming over here to the equity statement. Beginning equity is 0. He just started this business. He has not operated it. So it's 0. And next on the equity statement is owner investment. And if we look at our chart here, he did make an owner investment of $5,000. There we are. Now, I've got this box highlighted. It's highlighted in yellow. And I have it highlighted in yellow over here too. And the reason why is because these two numbers are the same. We're just going to pull this net income over here off the income statement and put it right here on the equity statement. So there we are. That's why it's highlighted in yellow. So you can see that the two are the same. Owner withdraws. Fred withdrew $25 to go for that skiing lesson. And I'll put here negative 25. So to figure out the ending owner's equity, we just simply total it all up. So let's do that. All right, so the ending owner's equity is $5,125. And if you're observant here, you'll see that that is the total in this equity column here. They are the same. Let's move on here to the balance sheet, the last statement, folks. So what's the balance sheet? It's just like the accounting equation. Assets equals liabilities and equity. So let's find out the balance for assets. The balance for assets is $30,125. So let's put that down here. $30,125. There we are. Liabilities. Liabilities is an even $25,000. And equity, so I've got this highlighted in blue. The reason why I have it highlighted in blue is because equity is going to be your ending owner's equity. So here we go, $5,125, right down there. And folks, so total liabilities and equity, here we are. All we're going to do is total this up. So there we go, $30,125. So let's see if it balances. Assets. $30,125. Total liabilities and equity, $30,125. That is the result of Fred's first month in business. It looks like Fred's off to a good start. He made a profit. He's a little wealthier than when he started, and his balance sheet is balancing, so all looks good. So thanks very much for joining me on this episode, and I'll create more of these. And hit that like button if you like this, hit the subscribe button,